What's up, everyone? This is Zach James with Order of Merchants, and I'm kicking off a new series that is focused on blockchain technology and cryptocurrency. For those of you who've been following the channel for a while, you know that we cover subjects like finance, law, governance, and business development. It just so happens that all of those factors play an important role in the blockchain space. So let's go ahead and get started. We're going to start with Bitcoin, which is obviously the original technology that launched this entire crypto boom that we're seeing right now, which is, total market cap has gotten upwards of $2.5 trillion, which is obviously the market is highly volatile, so that fluctuates. But with Bitcoin, we basically get a combination of 5 different technologies. And I got this list of technologies from Investopedia, which you can go check out as well. Investopedia covers things not only blockchain related, but also finance related in general. So the first one is that Bitcoin has an immutable database, or its blockchain has an immutable database. And there's a couple ways to understand what an immutable database is. For those of you who aren't very tech savvy, that might be a confusing term to you. So the first thing that we can kind of apply or to look at in the real world is the county recorder's office. In the United States, the county recorder's office often has public filings that you can make for title to property, to real property, and other things that basically need to be published, that other people can look at and search and observe, that they need to be on record by a third party, and that there's nothing really that can be changed about it. So for example, if I was to purchase property from you and you were to transfer title to me, but you misspelled my name, there's really not any way you could go back to the county recorder's office and say, hey, can I get that filing real quick and change the name and correct it? You'd have to make another filing because that original filing can never leave. It's part of the account now, and you can change it. You could change conditions that exist based on that previous filing, but you have to make a new filing to do it. So in a way, the county recorder's office is a immutable database in and of itself. Also, we can look back to technology with floppy disks and CDs, and we can observe that basically there's a couple different ways we can manipulate data, and that is we can write data to a disk. We can read that data, we can update that data, and we can delete it. And for those of you who remember CDs when they first came out, you really couldn't do anything. You would get some data, like some music on a CD, you'd be able to read it, but it already been written once. The music had been burned onto the CD, one time, and after that you can't burn it again. It's not like reburnable. I can't remember the official term that it was. Maybe someone can comment and remind me. But over time you were able to rewrite CDs and burn over them again. But that is basically something that is not available with blockchain technology. It's pretty much you are writing to a disk or you're writing to a database, and then you can only read it from that point forward. You only write once and then it's immutable. So it's very similar to the county recorder's office in that way. The way data is stored is what gives it the name blockchain. It's stored in blocks that are chained together. And so that's where we get the name blockchain from. And those blocks get confirmed by solving algorithms. And so that brings us to the type of confirmations that exist with Bitcoin, which is called proof of work. And proof of work uses computers which serve as mines to confirm the transactions. And that has actually proved to be quite inefficient as the blockchain projects grow over time. And we'll get into that more in a little bit. So another thing is that the data that is currently stored on blockchains primarily is transaction data, and that leads to the creation of a ledger. And the blockchains that exist right now, many different blockchains, the ones that are so popular that we know about, are actually public ledgers, which means that those ledgers can be searched via something called a block explorer, which is kind of like a search engine for transactions. And everybody can search the record, very similar to, again, a county recorder's office, because at a county recorder's office, anybody can search the record and they can view titles and they can look at title history and things like that to verify who, the chain of title, and that's funny, the word chain is used there too, and the chain of ownership on a particular piece of property. So the last element, so just in review, the first element is that it's an immutable database. The second element is that data is stored on blocks and those blocks are chained together. The third thing is that the data type that is stored on the blockchain thus far, and at least predominantly, is transaction data, and that's kind of what gives rise to cryptocurrency. And then we have that the blockchain, generally speaking, is a public ledger. There are private blockchains also. And that is decentralized. And so that is kind of the fifth element of blockchain technology that Bitcoin emerged with, was that it is decentralized, which means that it's not controlled by any central authority, no individual, no company that controls it. It is distributed and decentralized all around the world, which makes it virtually impossible to shut down. There's no place that a government agency can raid that is going to shut down the blockchain technology, which makes it incredibly powerful and opens up tons of different opportunities. So that's a brief overview of Bitcoin and its blockchain technology. And so now let's move on to Ethereum, which has really brought some new technology to the game. And it has, abilities that Bitcoin doesn't have. And the main thing that Ethereum has brought to the table is smart contract technology. And smart contracts are pretty much computer logic that helps create contracts and perform the obligations of one party or another party through technology and through logic. So that is dramatically transformative, not only in the contract space. First off, in contracts, which we've covered in depth over time, is that contracts just exist everywhere. I mean, you can't download an app without signing a contract. When you buy goods and services, you are getting into contracts. We have the social contract itself, right, which makes up our, the foundation and the governing terms of our civil society. So contracts just spread throughout every single industry exists where commerce is performed, which is pretty much every industry. So that is a huge technology. Now, Ethereum was also originally made with proof of work technology, which uses mining, and that takes up a lot of energy. And it turns out that as both Bitcoin and Ethereum has gained popularity and adoption over time, that that technology has proved to be really inefficient. It is slow. And it also costs a lot of money. And for those of us who've known Ethereum for a while and have been using Ethereum to move it from one wallet to another, you've experienced firsthand what it's like to deal with serious transaction fees. And I'm talking like $175. You may want to transfer $500 in Ethereum. And I think a week or so ago, it was costing like $175 to send, which is obviously unsustainable. And it makes things illiquid. Now, so just to kind of further explain my train of thought there, is that, when something has scalability issues and it has trouble with transaction time, transaction speed, and cost, it makes it to where people can't move it. And when people can't move it, it's not as liquid. And we use that term liquid in the finance world to talk about something that's easily movable. And we also use the word frozen, like my bank account is frozen, meaning that things cannot move, right? So what we're looking for is liquidity. And in fact, that was one of the primary reasons for the creation of the Federal Reserve, is because of the lack of liquidity that existed between banks. Each bank had its own banknotes. The banknotes were backed by treasury securities that the banks purchased, but we didn't have the digital world back then. So if you traveled to different states with your banknotes from your from the state that you were located, and that bank wasn't located in another state, then you had this issue where the bank had to verify the banknotes, and it just created a lot of liquidity issues, which means that things can't flow. And in the finance world, we really want to help facilitate the movement of commerce and to make things flow very easily. So this problem that both Bitcoin and Ethereum have, and Ethereum, it's almost a bigger problem because Ethereum has so much use case with its smart contract ability. People can create their own tokens on it, and you really can't do that with Bitcoin. You could fork Bitcoin, but you really can't create your own tokens on it in a way that you can with Ethereum. So there's tons of different projects out there that are using Ethereum to create their token and their technology that works in the Ethereum ecosystem. And the Ethereum token is called ERC20. So when you see that term ERC20 token, just be aware that that is an Ethereum token. And so while you get the benefits of the Ethereum technology and that you could build upon it and expand upon it by creating an ERC20 token, you're also inheriting all of the challenges that come along with it. And that brings me to the larger ecosystem and the larger crypto landscape. And if you're not exposed to that yet, if you're only familiar with Bitcoin and Ethereum, the apps that I would recommend you download is CoinGecko or CoinMarketCap. Both of those apps are great first apps to download, even maybe before you even invest, because it's going to show you the landscape of all of the different cryptocurrencies that exist. It's going to give you data on them and the ability to check out their website. And my recommendation usually to people first starting out is start out with the top 10 cryptocurrencies by market cap. For those of you who aren't familiar with the term market cap, it just simply means the total amount of coins multiplied by the value per coin. So for example, if a coin has, 1 million coins in circulation and the coin is $1 per coin, then the market cap would be $1 million. And so obviously you can see that's where the numbers come from in market cap. So don't get confused when you hear the word market cap. It's also a term that's commonly used in the stocks and bond space. Market capitalization of a company, really simple to understand. It's the total amount of shares or coins in circulation multiplied by the price per coin. And that will give you the market cap. Clearly, Bitcoin has the highest market cap right now, and Ethereum has the second highest market cap. And so when you're studying that first top 10, you just go down the line, starting with Bitcoin and Ethereum, study the technologies, their relationship with one another, their partnerships. And that's really a good way to get started. Eventually, you can move on to the top 100 or even the top 500 and just get familiar with what's going on in the whole ecosystem. Now, the reason why Bitcoin with its transaction fee and its speed isn't that as big of an issue, in my opinion, as Ethereum is because with Bitcoin, people are basically identifying it as digital gold, so a store of value that people can store long term. It's not meant to process credit card transactions, even though people are trying to create additional technologies on top of Bitcoin that kind of help facilitate that and make that happen. So anyway, so back to Ethereum. Since Ethereum had or has scaling issues, it is implementing new technologies in the near future, like Ethereum 2.0, that's supposed to help out with that. They're supposed to transition from proof of work technology to proof of stake technology, which makes things a lot more economical, efficient, lower transaction cost, and increased transaction speed. However, this problem has existed for quite some time. It's actually been around since about 2015 that this problem was recognized, maybe even earlier. For those of you who might know more than I do, you can go ahead and correct me on that if I'm wrong. But there's a couple founders of Ethereum that left and then recognized some of the shortcomings of Ethereum and decided to start their own projects. And the two main projects that exist out there by former founders of Ethereum is Cardano and Polkadot. Cardano's symbol is ADA, Polkadot is DOT. And these coins I would call platform coins, along with Ethereum. So Ethereum, Polkadot, Cardano, I call them platform coins, and it's something I look to when I'm investing in my crypto portfolio and I'm speaking with clients about crypto portfolio investment, is that there's like a class of coins out there that I would call platform coins, which are coins that really are creating an ecosystem of many other coins. You can create your own coins on those platforms. And so there's a whole ecosystem is probably the best term to use, that these coins are derived from. And to me, these are probably, while we're in the most volatile space ever dealing in the cryptocurrency and blockchain technology, these are probably some of the most secure coins to invest in, because a lot of other projects within the ecosystem rely on those coins. So in addition to the platform coins that exist, there's a lot of other coin types that exist. One is that blockchain has really infiltrated so many different industries. It's not just finance. It's crossed over into supply chain management, such as looking at VeChain. It's crossed over into the energy industry. If you look at Power Ledger, decentralized computing, if you look at Golem and Sonam, decentralized file storage like Filecoin and Crust. So there is a lot of different use cases that have come out with this type of technology. There's variations in the way that it's organized. There's a lot of governance experimentations going on. I like to call it like it's a petri dish of different types of governance and economic experiments with all these different coin economies and different, decentralized, voting protocols and things like that. So the ecosystem is quite vast. It's almost like the emergence of a new stock market, except it never closes, and that the coins have some type of function. It's not just to invest in and then watch the coin value grow, but it's also, these coins have utility. So there's a lot of different use cases for blockchain technology, and it's really like the creation or the emergence of a new stock market, except the crypto market never closes. And just one important thing to take away here is that it's much more than Bitcoin or Ethereum. There is a whole ecosystem of thousands of different coins that all provide some slightly different, value and use case. And so hopefully this serves as a good overview for you. And if you like this video and you got value out of this video, please like, subscribe, click the bell so you get notifications when new videos like this are released. And I look forward to hearing your feedback and comments and what you'd be looking for out of this channel. If you're new to the channel, definitely look at the past videos that I've created, which largely go really deep into, finance and law and governance, like I was saying, and also more recently in the past few years, business development. So looking forward to, learning more about you, the subscribers and people viewing the video. And I look forward to talking with you more in videos in the future.